The president, ladies and gentlemen, has graced our studios. It's always an honor and a privilege to welcome the president of multiple clusters here with Town Square Media, Michael Rubel, into our palatial studios. You know what time it is, kids. It's Tuesday. I know it feels like Monday, but it is Tuesday. And Michael was just telling us that which we've been reporting on throughout the morning, and that's that a lot of rain came down in a very short period of time, and it just overwhelms the sewer drains. It just can't keep up with it. Can you imagine when you see it flooded in certain areas that you don't typically see flooded? Can you imagine West End Avenue, Route 30, all the areas, Margate, in the back, areas back, the back roads of Margate, and it's got to be something else what's going on out there. The good news is it will subside and the drains will catch up, and that will be that. But we're going to have a very muggy, high humidity, 87-degree day, partly cloudy, winds out of the west, 10 to 15 miles an hour, partly cloudy tonight, low 71. And the next 2 days, for Wednesday and Thursday, 90 degrees on the mainland, maybe a little beyond, coming in the next day and 2 days ahead. Chuck Malamut is here. This program is presented by Chuck Malamut, a financial advisor at Morgan Stanley. Chuck is also the managing director of his team, the Malamut Group at Morgan Stanley's Northfield office. Chuck, I'll get your volume set in just a second. Don't let your heart be troubled. And this program is presented by Chuck each week, every Tuesday at 8 o'clock. The information, views, and opinions expressed on this broadcast are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck Malamut, how are you, my good man?
Good morning, Harry.
Good to see you.
You have a good holiday?
You know part of it. We were together. It was a great weekend. I love the pace of it. And as always, though, a handful of days can go so fast. It's just amazing how fast it all goes. But it was a great weekend.
I would imagine, Harry, was just a great weekend again for Atlantic City. Fabulous weather, traffic. It was pretty interesting because I think everyone sort of got away on Thursday. We had a lot of traffic coming to the shore, and on Friday was just a sort of a normal, a heightened day, but sort of a normal day compared to a traditional Friday weekend. But I think because the holiday being a Monday, people extended, and from what I understand, Harry, Atlantic City was very, very busy, and that's good. We absolutely need that.
You know what I also am very excited about for July, Chuck, and it's a rare event. For the month of July, there are 5 Fridays, 5 Saturdays, and 5 Sundays, and you had the 4th of July weekend in there, which I agree with you. Thursday was really like the getaway day. And something that I read is one time it said every 823 years you will have 5 Fridays, 5 Saturdays, and 5 Sundays in the same month. But I don't think that that's true. But it's still – and that was even like newspapers fell for that, but we didn't. But it's still a rare event. Yeah,
Harry, it was or it is, and
it's obviously good for the casino industry.
So the comps for July, 4 or 15 versus 16. I'm guessing 16 will be better.
It's going to look real good. I think we would have beat them straight up under the same exact conditions, but you add 5 Fridays, 5 Saturdays, 5 Sundays. I think that unless there's a incredibly unlucky hold percentage or something, it should be very, very good.
And I know you have a pretty big day tomorrow. You'll be visiting Atlantic City as well.
Oh, to see Hillary?
I think you have a front row seat.
I have a front row seat. Yeah, I've got an interview with Hillary that's coming up, and she's been very accommodating to her early in the morning. She loves what I do. Yeah, I want to ask Chris Coleman and Mike Rubel, can I just not come in tomorrow because I'd like to just be waiting on the boardwalk for her to arrive. I'll have like Hillary 2016. I'm voting for the perp T-shirt on. I want to be in the front row. Yeah, that's where I'll be.
Yeah, I'm sure you will be, Harry. But
No
obviously a little bit of sarcasm. So it's pretty interesting. I heard on the way in as you were chatting about Brexit, and And what ultimately happened, if you take a sort of a look back to where we were last week, I mean, the Friday of the vote, the market went down with 600 points, that being the Dow, and then the follow up on the Monday after, and then you had that reversal for Tuesday, Wednesday, Thursday. Friday was a up day, but somewhat muted. So
didn't it almost all come back?
Yeah, I mean, if you take a look, for instance, right now, the S&P is up 4% year to date. The Dow Jones is up 4.45, but all of that was basically printed last week. I mean, if you take a look, the S&P last week was up 3.25%. The Dow was up 3.2% for the week. The MSCI EFA, the international, was up 3.5% for the week, down 3.3% year to date. And I think the big surprise, we kind of talked about this previously, is the MSCI EM, emerging markets, up 4.5% last week, and so now up, clearly the leader up 7.25% going into the weekend. But we've talked a lot about oil, and it's just remarkable how the industry, that being our industry, trashed oil and all the oil-related companies. If you take a look at West Texas, Harry, now it's off about 2% today. But as of Friday, was at $49 a barrel. And you want to take a shot at where we were back in December this past year?
December of this past year. Well, it was, I'm going to have to say it was lower than that, because the price came way down, but it really hasn't gone all that.
Well,
was it lower?
Yeah.
It was a lot lower, right?
It was $37 and 13 cents a barrel back in December. So that represents about a 32% increase from where we were in the beginning of the year to where we were as of the end of June.
Now, some of that obviously is the summer blends and things that automatically happen, though.
Well, yeah, but on a comparative basis, if you go back about a year ago, the price of West Texas was over almost $57 a barrel, and now at $49. So that represents actually about a 16% decrease year over year. So there were a lot more people on the road as a result of these lower fuel prices, because the price at the pump was $2.80 a year ago and $2.33 as of Friday. So that's a 50-cent savings basically that was it that all the drivers enjoyed. I mean, the roads, I'm sure, were just havoc. They probably just very, very tough to negotiate. But that on the heels of a gas tax that I guess
didn't happen,
may or may not happen. Who knows where this goes?
It's not going to happen. The Senate didn't agree. It's done. It's not going to happen. The governor has actually ordered a halt to the Transportation Trust Fund projects that the money is not there to fund. I'm glad it went down. I mean, net, I believe in Kirk Conover. Net, the difference between the 23 cents added to the sales tax. This is more principle with me. It was the one tax that we had one of the lowest, depending on who you believe, second or third lowest in the country. So it was like, oh, good, so let's raise that. But then lowering the sales tax was actually going to be phased in over – it wasn't going to happen all at once. It was going to be phased in, like fractions at a time or whatever, within a couple of years. So I would be worried with Chris Christie leaving in a year. Maybe they never phase that back in, and how do you do? Here's the gas tax. So I'm happy it went down. Thank you, Steve Sweeney, who I think not only wants to be the next governor, but has a great chance of being the next governor, and didn't want to sign on to a massive tax increase.
So it's another question is what happens to the trust fund?
It's insolvent.
So now
that's what happens.
There are bonds out there that are based on the ratings of the state sitting at about I believe rated like an A-, so that's well within investment grade, but have come under a significant amount of pressure as a result of what was going into this bill, and then ultimately the bill being vetoed.
No, the bill wasn't vetoed. The Senate president didn't. The Senate didn't approve it, so it had the Assembly approval. The governor was agreeing to sign it, but it had to get through the Senate, and it did not.
Well, obviously, this is this is not over, Harry. It's like, if you kind of relate it back to Atlantic City and the amount of time that it took from the beginning to the end.
That's true. What you just said, it's not over. They're going to try to do something else.
This will be resurrected in some sort of way, shape, or form.
The one good thing, though, about our republic, though, is there's always somebody who wants to be the next it, that wants to be the next president, that wants to be the next governor, wants to be the next senator, whatever the case might be. So Steve Sweeney, say you had a Senate president who never wanted to be governor. I think that would have been posted. I tipped our audience off that I'm predicting that the Senate will not pass it because he said how surprised he was that the Assembly Speaker and the governor had struck that deal, proving he didn't know about it or that he wasn't ready to go with it. So fortunately, the sort of the checks and balances of this great representative republic made it such that my belief is it wasn't just like hurt feelings, hey, you didn't talk to me. It was, I don't want to put my name on a 23-cent tax increase that I can get crushed for. To
go from the lowest to one of the highest in the country.
I mean,
in a relatively short period of time.
Insanity. Chuck, I know you have a whole lot more. We're going to come right back. We're just taking a 60-second break away. You're listening to Chuck Malamut. He is the official, the exclusive financial advisor to the Hurley in the Morning program, the Hurley in the Morning charity. And this is our 26th year. On July 1st, actually, we began our 26th year together on Hurley in the Morning. Chuck leads the Malamut Group at Morgan Stanley's Northfield office, 609-383-2010 to reach Chuck and his team. 609-383-2010. You'll discover, as I have, how he has perfected his concept of total asset management coupled with the all-important asset allocation. More with Chuck Malamut. He's just getting started. Finish the market update, Brexit, VW settlement, Hershey, Mandela's bid, Starwood's Havana Hotel. So there's a lot to chat about in the half hour that we have straight ahead. We're back 19 minutes past the hour. I am Harry Hurley in the Morning. He is Chuck Malamut. Chuck Malamut is the official, the exclusive financial advisor to the Hurley in the Morning program. And to reach his team, the Malamut Group at Morgan Stanley's Northfield office, 609-383-2010. A lot more ground to cover. Chuck, time is yours.
So, Harry, as we finished up the, believe it or not, hard to believe that we actually finished the second quarter.
I know. Half the year. Bye-bye.
And the time just, flew by. So, as we started the beginning of the year, or the beginning of the quarter, it was pretty calm. And then all of a sudden, as we got to the end, the Brexit bang, I guess, is the best way to put it. I mean, believe it or not, as we talked about it before the break, commodities were the best performing asset class. Oil markets, we had a pretty good rally that led across the board in energy prices. So a lot of the individual stocks and bonds in that particular industry, I mean, everyone was pounding the table for multiple bankruptcies. There were a few, but I don't think the analysts were certainly expecting more. Real estate investment trusts, or REITs as they're referred to, Harry, had a very, very solid second quarter as well. And that was because of the stability that they exhibit versus the traditional, equity markets as they sold off in response to Brexit. So you think about Brexit itself. I mean, there's still a lot of work to be done, and there's still a lot of confusion. There's a lot of questions. I mean, we are certainly in uncharted territory. The concerns as we got into this morning were the fact that, the countries that make up, the Brexit-led, exodus, so to speak, they're going to come under a fair amount of pressure. As you see, financials, the big banks, the money central banks, begin to rework their staffing levels, and there's discussion that in fact there could very well be a recession as we get into the next year or so. But what has happened was that the Bank of England governor said on Thursday that because the economic outlook has deteriorated so much with Brexit, that they are in fact going to have some monetary easing, which was announced this morning, Harry, as you were on your show. So as a result of that, a lot of the international markets, were down going into that announcement. But what is happening right now is that what is referred to as the FTSE, which is directly tied to Brexit, the Brexit countries, is actually up. The DAX and the CAC, they are in fact down this morning as we go across the world. So we're going to have, I think, a fairly weak opening this morning.
Let me go back just a half a step, and then you can talk about the opening, because I see that even our futures are down for today. But let me ask you a question about this whole thing, because I've always believed it's not the end of the world if you decide that you do not want to be part of this globalist scheme that some people just envy and love and want the world to be this way. So you take a hit for a period, but there was life before the EU, and I understand there are more nations taking a hard look at this.
There are, but Harry, I think the countries that are tied directly to the euro. I mean, think about it. The UK did not. They had their own currency, the pound sterling, which, by the way, this morning hit again another 30-year low. I think when we had checked last and talked about it, it was in the 1.35, 1.34 range, and as we look at it this morning, it's now trading at 1.31 and change. So down another about 1.3% just for today. So think about how much suffering is happening within the UK right now.
They're getting pounded.
Literally, the pound is getting pounded.
Yeah.
I mean, you were at a 1.45 going into the vote. The evening of went up to a 150, a pretty dramatic move, and then less than a week or so later, you're now down in the 130 range. And great time, for us to travel, particularly to that part of the world, because of the currency.
Yeah, except for terrorism.
Well, yeah, I mean that's a whole other discussion.
Cheaper, but never more dangerous.
So, believe it or not, Harry, small cap equities. If we go back to the second quarter, small cap equities, outperformed large cap, and U.S. I mean, as we all know, outperformed international, as our stronger dollar put a fair amount of pressure on emerging markets and the Brexit fears, disrupted, at the very, very end as we got into the end of the calendar quarter. So I think, as you mentioned on the way in, and as you mentioned on the break, and as you mention all the time, it's very, very important that a portfolio is diversified and balanced. I mean, I know that we talk about it all the time, but a lot of investors have a tendency to, try to pick the next, hot sector, the next hot stock, and ultimately that sometimes does not end up in a happy ending. So as we take sort of a look at where we are year to date, Harry, telecom, utilities, and energy are the three leading sectors, up anywhere from 16 to 25%. Laggards, healthcare is
by the way, are they predictable based on the current environment? Or is there any surprises there?
No, I mean, take a look at utilities. I mean, everyone had expected as we got into 2015 and then in 2016 that you would have multiple rate increases, and then what would happen as a result of that? Utilities would come under pressure.
They just have to listen to her early in the morning. They wouldn't be expecting multiple rate increases.
So utilities right now, I mean, I think some of these sectors are a little stretched. I mean, the contrarian would go in here and look to buy sectors that haven't performed. Financials were the worst performing sector, as you can well imagine, for the quarter, down 3.5%. Technology was flat, and the same thing holds true for healthcare and consumer discretionary. So, the S&P itself, like I said, was up over 4%, but you get into it, there are certain sectors that did very, very well and others that have come under a fair amount of pressure.
Chuck, are you coming on board with the Hurley train that there will not be a rate increase before the general election?
Well,
are you on the train? I'm the conductor, and they let me hit the whistle every once in a while because like a little boy, I love it.
I'm going to say, Harry,
on the train.
I'm going to get on the train, but I might be sort of hanging off the
off the handles,
off the caboose,
the railings.
Maybe ready to jump, because I think about it here. I mean, everything that we exhibited in the last couple of weeks was a result of what happened outside U.S. Now, we have always talked about the importance of owning domestic and international securities. So the domestic securities obviously have done very well. Your your companies that have businesses across the world, and I'm not making recommendations. A Coke, a Pepsi, as an example. The multinationals. I mean, they've come under a fair amount of pressure, but
because after all, Pepsi is bringing back Crystal Pepsi.
I did see that.
So
yes,
this is a big.
For like 2 or 3.
Yeah, it was so spectacularly bad the first time. They
They're
can't
gonna do
wait.
it. They're going to do it again.
New Coke is coming back too. No, it's not. All right, Chuck. We'll get a break in real quick. We're going to come back in again just in less than 90 seconds. Again, for your financial planning needs, do as I do, not as I say. Turn to Chuck Malamut, the Malamut Group. Chuck leads his team, the Malamut Group, as he's the managing director of his team. At Morgan Stanley's Northfield office, 609-383-2010, 609-383-2010. Ask him, what's Harry talking about here with your perfected concept of total asset management coupled with the all-important asset allocation, and what does that mean? And you'll have a great conversation with Chuck about all of your planning needs, financial, college building years, vacation planning, retirement planning, the entire gamut with Chuck Malamut. We'll be back. We're back. It's 30 minutes past the hour. This portion of Early in the Morning also brought to us by the official, dare I say exclusive, yes I did, exclusive golf club to the Early in the Morning program. Harbor Pines Golf Club, owned by the legendary Gerwicks family. When you stop by, if you're having dinner, if you're scheduling a lesson, scheduling a tea time, buying a membership, and they have memberships galore to fit your lifestyle, to fit your schedule. They do a terrific job with so many alternatives that you have to choose from. And let me brag about Friday nights at Harbor Pines at 500 St. Andrews Drive in Egg Harbor Township. Harbor Pines Golf Club, owned by the legendary Gerwicks family. Friday night, the deck is open. Live entertainment. $5 martinis, $4 wines, $2 drafts. This is my favorite dinner. $25 8-ounce Maine lobster tail dinners at Harbor Pines Golf Club. And you can tie that in with a 9-hole golf rate after 4 p.m. that's only $25. So imagine that. You could actually, I would do it like this. I would schedule like a 4 p.m. start time, $25. You play 9 holes, and then you have a fabulous $25 8-ounce Maine lobster tail dinner, $50 day, afternoon, and evening. Tremendous value. To schedule an appointment, 609-927-0006 to reserve, 609-927-0006. If you're scheduling a golf outing, you can turn, and we had such a tremendous event, charity event, with Deb Stevenson and Alan Greenman, her boss, the general manager there. Deb Stevenson is the director of marketing and sales, and she does a really great job with the golf outings. If you're a new golf outing and you need that help, you will have literally the only certified golf tournament planner in the entire southern New Jersey region in Deb Stevenson. Tell her I sent you. Same number, 609-927-0006. And Deb's hotline, just hit extension 13. Chuck Malamut, you were saying.
So, Harry, as we got to the break, we did talk a little bit about having a broad-based, balanced portfolio, and I think the fact that what investors need to really be focused on is the fact that volatility is here to stay for a while. I mean, you take a look at the VIX, as it's referred to. It just made a huge, which measures volatility, made a huge move on the upside when the markets sold off, and as a result of what happened as we got to the end of the week, it was traded down fairly significantly. I think it was priced at 24, now down at 15, 16 or thereabouts. So that's just exhibiting the amount of volatility in the marketplaces, not only here domestically but more so internationally. So as you remember, we'll focus a few more minutes on Brexit, and then we'll shift gears here for a second. You've spent a lot of time, Harry, talking about the credit rating of our U.S. government and how it was cut and the reason why. Mm-hmm. So now we are starting to see credit ratings being cut, pretty much across the world. Standard & Poor's at the end of last week, stripped the UK of its last remaining AAA rating, cutting it 2 notches, to a AA. Moody's in the meantime put the UK on review for downgrade, leaving its rating as a AA1. The European Union had its rating cut on the British decision as well, and they cut from a AA plus, to a AA. So what is happening now? Because of all the action, globally speaking, that global bond yields, continue to move in the wrong direction. As we kind of, chatted about before the break about, will the Fed make a move? Will they not make a move? Are they going to make a move before the election?
I'm in here shaking my head. I was shaking my head no, then I shook my head yes, then I shook my head no. Chuck, just stick with your brother Harry. I've been right all year. Even on Brexit, I said it would only be a bad couple of days. There will not be a rate increase before Election Day. I promise you.
I tend to agree with you, but if Harry, I think
nobody else did.
I think I'm going to take a semi-pass, and the reason being, if the economic data continues to show improvement here in the U.S.
But isn't there a lot of sort of agreement, Chuck, that the earnings are not going to be all that great?
Even considering what's happening outside the U.S.,
what about earnings?
I think the Fed, in the worst way, wants to get the train moving, so to speak.
I agree with that.
So if there's any sign of a potential positive movement, I think they will make a move.
It's a little goofy right now because they didn't do it when they could have without criticism, and I was surprised. Then they did it when they shouldn't have, and it was minimal, and the rate increase was so slight that there was no big hue and cry about it. But looking at how things are going right now, are we really in a quality rate increase environment?
They're talking second quarter earnings, and as we get to the end of the year, are going to be improved.
Well, but I'm hearing earnings are not going to be improved.
So we'll see. I mean, Halcoa reports relatively soon, Harry, and then all the other companies follow in short order. I think the financials could very well be stretched, as evidenced in what happened in the equity markets, but it'll be interesting to see these other companies report as to what those results are going to be.
And Chuck, I'm not saying this is the oracle or anything here, this one source, which, some people like it, some people don't like it, Financial Times. United States of America, longest earnings recession since crisis looms for U.S. shares. Energy expected to weigh heavily on S&P 500 results, and financial struggle to boost profits. They're looking at not great earnings.
Second quarter, I think it'll be marginally better than the first quarter. I mean, I think we hit the earnings trough in Q1. But what's not getting a lot of attention here is the fact that global bond yields continue to move in the wrong direction. I mean, you look at the UK, that their 10-year bond last week, Harry, fell to 0.81%. U.S. yields, we retested those record low levels in the 140-ish range in the wake of the Brexit referendum. German bond yields, as they're referred to, slipped even deeper into negative territory for a few days. But here's what I think everybody's missed, and this, you kind of bring it home here. Everything's happening in Atlantic City with their debt and their debt ratings.
Yes.
Puerto Rico, the rescue bill was signed. And in the meantime, the governor of Puerto Rico, basically, they made a decision, their government, that they were not going to pay the general obligation bonds.
Well, it's not a fine. How do you do?
I'm sorry, what?
I said, isn't that a fine? How do you do?
Yeah. So now, now you have.
It's a terrible decision.
Well, the decision. I mean, it's never happened before.
Right.
So the decision was made that we are so far over the diving board, so to speak, and in so much distress. And I heard that the debt, the existing debt in Puerto Rico amounts to $20,000 per citizen that lives in Puerto Rico. And the utility bonds the revenue type bonds, the school bonds. I mean, they're getting paid because the decision was made that those essential services are very much needed for the survival of the island. Now, what's going to happen, Harry, is that when we're not paying off these GOs, you're now going to have sort of I guess for lack of better words, a war, because if you own a GO and this is in fact insured by an AGMC or FGIC, I mean, there's about 8 different agencies out there. It now falls on the agency to make good on that payment. So they're going to go back, to Puerto Rico and say, well, what are you guys doing here? I mean, you can't put us on the hook for this. So I think more to come. And we have not, as you mentioned this morning, very early, the fact that it's a long weekend and a lot of news gets lost.
A lot of news got put out there
and
on this weekend.
And this got totally lost.
On purpose.
As a result of that being a holiday weekend.
They dumped it on purpose. They dump it in right then and there.
Mm-hmm.
Chuck, we have about whatever time you shall consume, because I don't have anything until the top of the hour, but I know that we typically end in about 6 minutes from now. And I know you want to talk about the VW settlement, Hershey Mandala's bid, Starwood's Havana Hotel. So time is yours.
So, Harry, as you know, what happened with Volkswagen was certainly over the top, and I don't want to. I guess we can say they cheated. I mean,
they admitted they did.
I mean, I hate to use that word, but
we can say because they admitted it.
So they agreed last week to a $15 billion settlement because of the U.S. emissions case. So they're going to this settlement is going to settle allegations that it deployed software to defeat government emissions tests. So the company is going to buy back vehicles from consumers and spend billions to fund programs to reduce emissions. So more to come with that.
Could they literally get crushed from this? Because you're not just talking about the $15 billion that they agree, because that ended a lot. They needed to do that because that ended any criminal type process that would have begun. That settles it. It kind of keeps it all administrative. $15 billion gone. But then look at all these cars that they have to buy back.
Yeah, I mean, the obviously the stock came under a lot of pressure. I think it was back in this, late winter, early spring when this actually unfolded. And as a result of that, the company is under a lot of stress. So, and I would think there'd probably be more to come. Sort of shifting gears as we got to the end of the week, Mondelez made a very, very attractive bid, to Hershey's. And Hershey's, in fact, because of the way the company is owned, and you have a lot of insiders that own the great majority of the stock, they rejected a $23 billion bid that would have created the world's largest, candy company. I mean,
would the government have allowed it with their record?
I think. Well, Harry, look, it's hard to tell because
I mean, they didn't allow some dopey home office merger.
Well, but
I mean,
that wasn't a look. We had Staples and you had Office Depot. I mean, they controlled the U.S. market. I mean, I think what is happening here.
But if these two went together,
Mondelez is more international. Cadbury as an example.
Cadbury, but add Hershey in there though.
You do, and so I'm not a betting guy on this, but I wouldn't be at all surprised if this deal, gets squashed anyway because
the people don't want it.
Well, the Hershey's people don't want it. Obviously, you could end up in sort of a, remember the old days of a hostile takeover. Now, whether or not that's possible or not is anybody's guess. Now, as you know, Starwood's is in the process of being acquired by Marriott.
Yes,
and that's been ongoing for quite some time. And last week it was sort of history in the making. They opened the first U.S. branded hotel in Havana, and the last time this happened was 1959. So they opened at 4 Points by Sheraton. It's owned by the Cuban military, and it's the first of its kind in Cuba. So obviously, with all the travel restrictions being somewhat eased into Cuba. As well as restrictions that have been lifted on trade and investments, you still have an economic embargo technically in place, but this is obviously big, in the development of that particular country. So I think more to come there, Harry, for sure.
Chuck, closing comment of any kind.
So, Harry, as we're looking today, the futures are pointing to a lower opening. I mean, I think the last time I looked, the Dow futures were off about 100. Earlier this morning, they were down. They came back, and right now, they're sitting about 100 points, and that's about 0.5%. The S&P and the Nasdaq are off about the same. But you think about what we put in last week. You do not that you want to move backwards, but you want to get a little consolidation in here, because the last thing that you want to have happen is the market, takes off, and as a result, I don't need to explain to you what's going to happen after that. If everybody gets, very, very giddy, and then as you mentioned, if second quarter earnings do not come as expected, that's going to have a negative impact, obviously in the equity markets. So
I'm checking the pre-markets as we speak too. Just taking for some reason longer.
Yeah, so the Dow's off 105, and the S&P's off about 14, and the Nasdaq's off about 30. As we get into the opening today, internationally, the FTSE is still up. The DAX and the CAC are down. The Nikkei and the Hong Kong Exchange were down last night, about anywhere from 0.5% to 1.5% in the Shanghai. Chinese market goes up about 0.5%. So, you think about oil down about 2% going into today. We do need a little bit of consolidation. Friday was an iffy day because a lot of people were out of work, so the market being up or down really didn't make much of a difference. But if we can, consolidate these gains and then move forward, I mean, we are well within striking distance of significant numbers within the Dow and the S&P.
Is this pretty typical, Chuck? I mean, you can't say it every time, but Wall Street rallies, then it pauses, and the rally fades. I mean, that's pretty much, if you look at every single futures, everything is down.
Well,
as,
Harry,
as the market's open.
Well, Harry, look, it's one day does not make a market.
Exactly.
So, any sort of news flow in any direction could very well speak volumes. But, what happens on a Monday after a holiday weekend, the news flow is typically fairly slow. But I think the next thing that we look at, as I mentioned a few minutes ago, earnings start. Alcoa comes in a couple days. They're not certainly a bellwether for the rest of the market, but they just always report first. And then shortly thereafter, then all these other companies will come, and anybody's guess where we go. But I think it's hard to believe, Harry, that we were here 2 weeks ago.
Ooh.
And the market did what it was doing, and all the doomsdayers were out there, basically trashing the market. And last week I think there was still a lot of short covering as well that happened as we got to the end of the week, as traders looked at their positions. They wanted to get away for the weekend and didn't want to be short, so to speak. So they covered as well, and I think the market has something to do with that.
With great pride, I say this statement in closing, and I want to make one other comment for Chuck, if he can stay for an extra minute or so. You might remember this. I sent you a text message after Brexit, and this was before we even had the first bad day. I said that this would be short-lived. Now, I learned under the school of Malamut, and it was short-lived.
Well, sure, Harry, I'm not so certain it's short-lived. I think we worked our way through, that being the equity markets, the sell-off that we had. But there's a lot of work that needs to be done.
Oh, I agree with that.
And you will have, you will have volatility. It's going to happen. And so don't expect, the market, to make minor movements. I mean, any sort of news coming from Brexit, could in fact put the market in one direction or another. So I think your listeners need to be very, very cautious of that as we get into the second half of this year.
And my affinity for the oil and the price of gas and all these things, so I can't help but end with this. I've been saving this for the very end of the program, which is now on overtime. If Chuck can stay for one more minute to comment, did you find it interesting that the United States oil reserves have now surpassed both Saudi Arabia and Russia?
So what's that? I do, Harry. So what's that tell you?
That tells me that we better be on the path for more independence. I mean, we're in the position right now where even under very restrictive policies and no new capacity coming online on purpose and the destruction of the coal industry, the purposeful, I think, policies of this administration to hurt the petroleum industry, this tells me that if we get out of our own way, we're already producing half of what we need every day. We can get to energy independence is what I believe. That's what that tells
Harry,
me.
I'm on board with you and agree 100%. But you've been doing this show for 25 years.
Yes,
you would have thought by now. I mean, we are making progress, but we should have made significantly more progress.
Well, let me say
in a quest to be independent.
But let me say, I'm not surprised we haven't, though, because you talk a lot about geopolitical, and this is what I do on this program when it's not the Malamut show. Is we talk about why things are the way that they are. Keep in mind, in all this time, very rarely has there been enough time for one party to be able to make certain big moves, because either you had a president of one party and at least one house of the other, or two houses of one party and the president of another. So I'm not surprised we haven't gotten there, because there's a great reluctance to do this.
Absolutely. I'm not so certain that we want to do this. I mean, you and I and your listeners want to do it, but
if we had the right Congress and the right president, we would forge onward. It would be safe. We would have the Keystone XL pipeline. We would have energy independence. And then you're talking about, I mean, we would bring the OPEC ministers down to their knees, because literally we would have our own single source accountability. We wouldn't have to worry, is gas going to be $4 a gallon if some ministers, go wild on us or anything like that. We're so close to being energy independent.
We are, Harry. So,
but also we're also close to destroying the coal industry completely and making it very, very expensive. And we could tip either way.
Yeah, I think more to come, and obviously tomorrow you'll get all those answers if
I cover that from the front row, the Democratic nominee.
Harry,
yes.
Thanks for having me.
Thank you, Chuck.
It'd be interesting to see you on TV tomorrow.
Yeah, I'll be there. Don't you worry. You can set your watch on it. Don't. Chuck Malamut leads the Malamut Group at Morgan Stanley's Northfield office. To reach Chuck and his team, 609-383-2010. The following program that you just heard melodiously presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck Malamut. They do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast. They're subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. We're going to step aside for 3 minutes, a closing mini segment. If you want to jump in, phone lines are open right now at 609-407-1450. I have what I hope you will agree. It's going to be very hard. Somebody'd have to be a real hater to not love, or to hate, if you want to put it in the negative, what we're going to be doing in the next hour. I'm keeping it a secret until I return at 9:05. But I'm telling you, it is going to be a blast. And I'm asking you to email me your submissions during the next hour. 609-407-1450. I have put together a complete 1 hour and 6 minute program without a single piece of input. But we always want your input. Email me, harryhurley@aol.com in the next hour, and I'll do my best to work in your submission to what we're going to be doing, which is going to be honoring, I'll give you this much, it will honor our independence here in America.